Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on your channel Profit in Equities. In this video, we'll be talking about a dirt cheap infrastructure stock which has cleaned up its balance sheet, has ample liquidity and is sitting on huge order book with well-funded projects. Please watch this video to know about this stock which has all the trappings to be a future multi-bagger. Now the company in question is IRB Infrastructure Developers Limited, which is available at Rs 120.40 and the face value for it is 10. The symbol for it is IRB. Now IRB Infrastructure has survived most of the past down cycles and taken initiatives like the launch of Infrastructure Investment Trust well ahead of others in order to safeguard against catastrophes that most construction companies faced. Over the past 10 years, IRB too has had its share of problems and its market capitalization shrank below its net worth. But the stock often bounced back as the market took cue from growth in its earnings and assets. Its business is backed by hard road assets. Equity capital invested in these assets cannot be reduced to zero. The biggest crash in its stock price took place at a time when murder allegations were raised against the promoter in 2012. This was also a period characterized by infrastructure slowdown and a policy paralysis as most projects were delayed due to lack of clearance. This was also a time when IRB withdrew from the bidding process of the prestigious Rs 14,000 crores Severi Nava Seva Trans Harbour project, citing government's apathy and unfriendly attitude towards developers of infrastructure projects. Mid-2013, its stock touched a low of about Rs 55 a share, or about half of its book value. Now that was probably the worst period in its history. Today nothing of that sort has happened, but the situation is quite reminiscent of the earlier occasion. One possible reason is the overall pressure in the mid-cap stocks, particularly infrastructure, but the magnitude of the correction seems to be unjustified. The company has cleaned up its balance sheet, has ample liquidity, is sitting on a huge order book, and its projects are well funded. Since FY14, its net worth has increased from Rs 3,560 crores to 5,667 crores in FY18 at an annual growth rate of 12.3%. Despite that, the company's shares are trading at levels last seen prior to the 2014 general elections. It's currently commanding a market capitalization of Rs 4,231.46 crores, which is less than its FY18 net worth of Rs 5,667 crores. At the current market price, it is offering a dividend yield of close to 4%, making it even more attractive. On the business front, traffic has been growing steadily after demonetization and implementation of GST. On the construction side, it is sitting on an order book of close to Rs 14,000 crores, which is about 4 times its sales and provides strong revenue visibility. Moreover, with divestment of few BOT assets through InvIT, it has garnered strong cash, which along with internal accruals can help it pare down its debt further and deploy it in the business to fund projects. These projects are divested at an internal rate of return of about 12%, and the money raised could now be deployed for future projects or acquiring assets which can yield 18 to 20% annually. All these traits make it well worth looking at on huge market corrections. Now friends, a disclosure on our part, we hold this in our personal portfolio at much lower levels. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. We'll be providing the link to the source for this video in the description section. Please go through the URL to build more conviction around your investment decision. Thanks for watching, and if you have not yet subscribed to the channel, please consider doing so.